Your insurance agent is hiding a $500,000 benefit from you, and it's not because they're evil, it's because they don't get paid to sell it. I'm talking about the Guaranteed Insurability Rider, a clause in your life or disability policy that lets you buy additional coverage later, no questions asked, regardless of your health. This single rider can be worth millions over your lifetime, yet fewer than 5% of policyholders even know it exists. In this video, I'll show you exactly how it works, how much it actually costs, and the exact strategy to add it to your policy today. According to a 2025 study by LIMRA, 40% of adults will experience a major health event that makes them uninsurable for new coverage. Yet the average person only buys life insurance once, at age 35, and never touches it again. Meanwhile, the Guaranteed Insurability Rider costs as little as 5 to 10% of your base premium, but can unlock hundreds of thousands in additional coverage later. With medical inflation rising 7% annually, the ability to buy more insurance later without underwriting is becoming a necessity, not a luxury. In fact, over 60% of financial advisors recommend this rider to clients under 40, yet fewer than 1 in 10 policies actually include it. That gap is costing families real money. Think of your insurance policy as a safety ladder. A standard policy is a ladder that's fixed at one length. It only reaches so high. The Guaranteed Insurability Rider is like buying an extension kit now. While it's cheap, so if your house gets taller, your income grows, you have kids, you develop a health condition, you can extend the ladder later without buying a whole new one. Without it, you're stuck with the original ladder, even if you now need to reach 3 stories higher. This extension kit costs only a few dollars per month, but can double or triple your coverage down the road. 1. What exactly is the Guaranteed Insurability Rider? It's a contract clause that allows you to purchase additional coverage at specific future dates, usually every 3 to 5 years or after life events like marriage, childbirth, or a new job, without undergoing medical underwriting. Most carriers offer it as an optional add-on for term life, whole life, and disability insurance policies. Without it, if you develop a condition like diabetes or high blood pressure, you may be denied new coverage entirely or face sky-high premiums. 2. The cost myth. It's surprisingly cheap. Many people assume any rider that gives future benefits must be expensive. In reality, the Guaranteed Insurability Rider adds only 5 to 8% to your monthly premium. For a 30-year-old buying a $500,000 term life policy, that means about $5 to $10 extra per month. Over 20 years, you're paying roughly $1,200 to $2,400 total, but you gain the ability to buy an additional $250,000 to $500,000 of coverage later at standard rates, even if you become uninsurable. That's a potential savings of tens of thousands in premium surcharges or denial risk. Number 3. Real-world example. A 30-year-old's potential windfall. Meet Sarah, a healthy 30-year-old who buys a $500,000 term policy with the rider for 8-month extra. At 35, she has twins and wants to add $250,000 coverage. Because of the rider, she gets it at standard rates, no medical exam. At 40, she's diagnosed with a thyroid condition that would normally spike her rates by 300%. But thanks to her rider's remaining options, she buys another $250,000 at the same standard rate. By age 45, she's secured $1 million in coverage without ever being penalized for her health. The total extra cost for the rider over 15 years? About $1,440. The value of the additional coverage she obtained? Priceless. Number 4. The trigger events, when you can actually use it. The rider typically activates on policy anniversaries, every 3 years, and after qualifying life events: marriage, birth or adoption of a child, buying a home, starting a business, or a significant salary increase. Each carrier defines these differently, but most give you 60 to 90 days after the event to exercise the option. The key is to document these events formally. Your agent may not remind you. I recommend setting calendar alerts for your policy anniversary and every major life milestone so you never miss a window. Of 5. The strategy to negotiate it with your agent. Most agents won't mention this rider because it reduces their commission on future policies. You buy from the same carrier instead of a new one. To get it, you need to ask directly. Does your carrier offer a guaranteed insurability rider? Can you quote it on my policy? If they say no, request a quote from companies like Prudential, MetLife, or Northwestern Mutual, which commonly include it. If you already have a policy, you can request a policy conversion or add a rider endorsement within the first few years. Do not accept it's not needed. Insist on seeing the specific dollar cost for the rider on your quote. Here's your one concrete action step. Call your insurance agent today and ask for a guaranteed insurability rider endorsement on your term life or disability policy. If they push back, remind them that many top carriers offer it standard, and if they won't add it, get a quote from a carrier that does. Just that single phone call could secure you hundreds of thousands in future coverage. For a real-life example of how this rider saved one family from financial disaster when the breadwinner was diagnosed with cancer, click the video right here.